Well, hello. Thanks for joining me tonight. This is going to be my second YouTube live stream in terms of the Mullen coverage. I did put out one quite a while back when we were going over a shareholder meeting, but this is going to be my second one where I really do a deep dive into some of Mullen's filings. Last live, I did go over their 10Q, or I guess it would be their 10K. This one, we're going to actually go over the S1 filing. We're going to start with the 8K where it was announced. We're going to then go through the SPA. Then we're going to take a look at the SP1, or I'm sorry, the S1, and then we're going to finish off with the registration rights agreement. I already pre-read all of these documents and put little check marks next to each of the different sections. So let's go ahead and get started right away. Let me pull up my chat here in case we have anyone else deciding to join. All right, looks like we do have one person in the chat. I finally got it working. Appreciate the patience, everybody. Let's go ahead and jump right into it. As I mentioned, we're going to start with the 8K. So this 8K was put out back on January 23rd. So it's been quite a while since they made this first announcement, but some of these other filings are more recent. Let's just quickly jump through this 8K. As I mentioned, I have the specific sections checked off that we're going to basically review tonight. Starting with that top section here. So on January 23rd, Mullen Automotive entered into a securities purchase agreement with certain investors pursuant to which, upon the terms and subject to the conditions contained therein, the investors agreed to purchase, hey, what's up, Ayub? An aggregate amount, principal amount of approximately $6.3 million of 5% original issue discount of secured notes. It has a common stock par value at 0.001 per share, and 5-year warrants exercisable for shares upon common stock. That last part's important. We're going to go through the impact of these warrants, and well, I should say the potential impact of these warrants, as we go through these different filings. So first off, that was the first section we're going to talk about, but let's get into a little bit more about the description of these notes. So you can see here that the notes accrue an interest at 15% annum, which is per year. So that's the annual rate. They have an original issue discount at 5%. So that means that the I believe it was 6.3 million is not actually how much money Mullen is going to be getting back or getting from the specific lender because there is a 5% discount. So looking into it, again, let's jump down here. So as security for payment of the amounts due and payable under the notes, the company granted a continuing security interest in all its rights, title, and interest in its assets, whether owned, existing, acquired, or arising, or wherever located. So again, that's really important. They're actually putting all of their assets actually basically on lien against this specific secured note. So in the event that this note becomes default, they could be in trouble in terms of the lenders actually taking a lot of these assets. So if they were to go into bankruptcy and have to liquidate, these specific secured note holders would be the ones that would actually get these specific assets depending on the value. All right, next section we're going to take a look at is going to be this next paragraph down here under the outstanding principal and accrued but unpaid interest of the notes may be converted by the holder into shares of common stock at the lower of 39 cents or the lower of 90% of the closing sale price of the common stock on the date that the registration statement is declared effective, or 95% of the lowest daily volume weighted average. That's called a VWAP for anyone who doesn't know, average price in the 5 trading days prior to such conversion date, provided that the conversion price will not be less than 8 cents per share. So there's your floor in terms of being able to convert these secured notes. They're able to convert these all the way down to 8 cents, starting at the 39 cents. So basically, 39 would be the ceiling, and then you're going to find 8 cents at the floor. Going into the third paragraph down here. So upon any event of default, the interest rate automatically increases to 20% per annum. An event of default includes failure to obtain stockholder approval within 45 days after the closing date for the initial closing. Failure to maintain sufficient reserves of authorized and unissued common stock to redeem 250% of the maximum number of shares issuable upon conversion of all the notes. Then outstanding failure to timely deliver or remove any restrictive legend from the shares upon conversion of the note for a period of 5 business days. Failure in an aggregate amount of excess of 300,000. Really, I I can continue reading through here because there is a section that kind of goes over the default, but really that first little bit to highlight is really that in the event there are any defaults, the first thing that's going to happen is that interest rate is going to go from 15% all the way up to 20%. So again, we've seen it happen before with some of Mullen's secured notes. They did accelerate up to that maximum interest according to the different filings. So according to that specific SPA. So looking down here, we're going to go down to the section that says if such default remains uncured for a period of 10 consecutive trading days, bankruptcy, insolvency, reorganization, or liquidation proceedings, or other proceedings, a judgment, settlement, or any other satisfaction of any claim to any litigation with respect to the payment of cash securities and or assets with an aggregate fair value in excess of $300,000. The company breaches any representation of warranty. These are all the different possibilities, the different paths that will lead to default, by the way. Failure to file annual or quarterly reports. We've seen them late on these reports time and time again within the required periods. So there you go. It looks like they will have to continue to file these specific 10Qs and their 10Ks on time. Failure to reduce annual salary expense by $13 million by February 1st, 2025. I thought that was actually pretty interesting. I wonder if Mullen will put out a PR talking about additional layoffs or how they're going to go over cutting down $13 million off of their G&A. Of course, they could go ahead and fire the rest of their workers. That would affect the cost of goods sold potentially, but let's be honest, it seems like most of those workers are gone. I haven't heard anything about any production anytime soon. They did talk about future plans of that battery factory, but I think that really we're just paying all of these executives at the moment. When I say we, I mean anyone who's still buying Mullen shares, holding them long, and then seeing those shares go down in the form of dilution because of this equity financing. So again, they're supposed to cut back that G&A expense by $13 million by February 1st, which would have been yesterday, Saturday. So it's going to be interesting to see what comes out of that. So let's jump down to the next page here. Description of warrants. In connection with the issuance of notes, the holders also receive 5-year warrants exercisable on a cash basis for an aggregate of 32,388,664 shares. We're going to talk about exactly how many shares Mullen has in just a little bit when we read the S1, but I can tell you that the amount of warrants we're talking about is close to 50% of Mullen's outstanding share count. So if you don't think that these specific warrants are going to cause some price impact, price velocity in the downward direction, you should really look into the impact of warrants. And in fact, Mullen talks about that in some of these warnings. We'll talk about that a little bit later. Subject to adjustment, the warrants provide for a cashless exercise pursuant to which the holder will receive upon exercise a net number of shares determined in the according formula. I'm not going to go over the formula, but basically this helps in terms of dilution. If the price is going down, the note holders are going to receive even more shares. So I'm not going to read through the rest of this. Just want to go over some of the sections that I have checked. They talk a little bit about how they're going to be able to convert these warrants, just the activities. A lot of this is basic jargon. So if you do want to know more about this, I will put a link in the description of this live video once it's published, providing this 8K link, the SPA link, the S1 link, and of course the registration rights agreement link. Moving on to the next page. Here we go here. If during the restricted period, the company effects a subsequent financing, including the issuance of options and convertible securities, any common stock issued or sold or deemed to have been issued or sold for a consideration per share less than a price equal to the current conversion price of the notes or exercise price of warrants, then immediately after such issuance, the conversion price or exercise price is applicable, will be reduced to the price per share as determined in accordance with the following. So again, if Mullen issues any more types of notes or basically any other options and other convertible type of issuances, then this other formula is going to apply. So again, it's protecting these investors. How many days under $1 now? Jesse, that is a great question. I think FUD Daddy on X actually posts that each day. I believe it's over 20. I will take a look at the end of this and I will drop it in the comment for you. So sorry I didn't have that one off the cuff. But I do know that they did have that shareholder meeting. I believe it happened on Friday. And I was told it was about a quick 5-minute meeting. I did not listen in myself, but they did approve that reverse split. They haven't announced the ratio. I believe that should come out either Monday or Tuesday, as they will need to accelerate getting this split going. All right, so jumping down into here. Again, the only thing I wanted to talk about on this formula is, again, they talk about that floor price, so 8 cents per share. So let me just look at that. So that's EP2. It says it's a conversion price or exercise price as applicable immediately after such dilutive issuance, provided, however, that such price shall in no event be less than 8 cents per share of common stock with respect to the note, or 1 cent per share of common stock with respect to the warrant. So again, the floor is set at 8 cents to convert the note, and then 1 cent to convert the warrant. So again, that's going to cause quite a bit of dilutive impact to shareholders. Even if they do a 1-for-100 reverse split, this specific amount is most likely going to go up to about $8 per share is going to be the new floor with respect to the conversions, and then $1 per share would be the warrants at a 1-for-100. So again, this $6.3 million of the secured note is going to have a dilutive impact, and based off of their cash burn and some of their cash on hand that they put out in their filings, I do believe they're going to be exercising as much of this as possible. They did register some shares. Again, that's part of the S1. We'll get to it, but those shares have not become effective yet. So there will be another SEC filing. It has to do with the effective date. Or the effectivity of this S1. So as soon as that date comes out, you can guarantee that they will start to convert these shares. Like, at least that's my opinion based off of history. All right, so jumping down here, registration rights agreement, we're not going to touch on this now because we're going to talk about the entire document in full in just a little bit. Jesse, have you ever looked at Pinex? It lets you build robot crypto trading algorithm bots. No, I have not taken a look at that. I'll take a look. I haven't really gotten into too much crypto trading myself. The closest I've done is really proxy trading in terms of some of these Bitcoin mining stocks. But again, I'm just purchasing shares. I have received some small amount of crypto tokens, but I have not traded any of that. I'm just holding on to it. But I'll take a look. So you've been having issues with Robinhood. Yeah, that's the difficult thing with a lot of the crypto is depending on the security that you're doing, you can end up losing. So if you were to dabble in that, I would definitely recommend not linking to any of your bank accounts, and then also keeping that amount pretty small, only using what you're willing to lose 100%. Even if you're up a lot, you have to remember that it is a very fast-moving market, the cryptocurrency market. All right, jumping back into here. So we're going to skip this registration rights section, looking for that next check mark. So that's the end of the 8K. Like I mentioned, not a whole lot in here. This is more just the introduction for the SPA, and then for the registration rights agreement. So let's jump on over to the SPA section now. All right. So looking here at the SPA, and as I mentioned, we talked about that 6.3 million. You can see here with this discount what that looks like. So again, this securities purchase agreement was dated for January 23rd as well. It was an exhibit as part of either the 8K or the 10K. I believe it was part of the 10K based off the fact this is exhibit 10.1, but I could be wrong there. Let's jump down in here. So this is part of the recitals. Let's start with paragraph B. The buyers wish to purchase and the company wishes to sell upon the terms and subject to the conditions stated in this agreement an aggregate of $6,315,789.48. So that's the principal amount of the 5% original issue discount secured convertible notes in the form attached in this Exhibit A. Collectively, they call it the convertible notes. I'm not going to go through the specific convertible note document itself, but we are going to take a look at the S1, like I mentioned. So let's continue down. I just wanted to highlight what this principal amount would be. All right, let's see here. And as I mentioned, here is that discount I talked about. So That is the amount that the lender is going to be owed, and then it says payment. So on the closing day for the closing, each buyer shall pay its pro rata portion of the aggregate $6 million. So again, these lenders are going to be giving Mullen Automotive $6 million. Mullen Automotive is going to owe them $6,315,789. Again, they don't necessarily have to pay it in cash. They can pay it in shares. They've done it before. I don't see why they wouldn't do it again. If you look at what they've actually generated in terms of capital from the cost of, or from the amount of goods sold, so far for the entire year is around $1 million. So I would assume that the majority, if not 100%, of this SPA will be paid back in shareholder equity in the form of additional shares, but we'll see. So again, jumping back in here, I mentioned pro rata portion at $6 million to the company by your wire transfer of immediately available funds in accordance with the company's written wire instructions, and the company shall issue to each buyer a convertible note with a principal amount equal to the buyer, to such buyers its pro rata portion of that $6,315,789. And we're actually going to break it down by each of these different investors to see. There should be no surprise who they are, but we're going to take a look and see exactly who is purchasing these convertible notes from Mullen Automotive. We're not going to talk about the representation of warranties, so let's jump down to the next section here. Nothing checked on this page. Nothing checked on this page. Let's keep taking a look here. Patriot Act, representation warranties of the company. Nothing here. Nothing here. We're going to blow through as much of this as we can. So let's pause here. Let's look at paragraph I. Dilutive effect. No kidding. The company understands and acknowledges that the number of conversion shares and warrant shares may increase in certain circumstances, as it has in the past many times. The company further acknowledges that, except to the extent an issuance would exceed the beneficial ownership limitation contained in the transaction documents. Again, it has to do with the fact that it can't be more than 9.9, or in the event that they decide to do that registration or that the rights section, it could potentially be 19.99. But jumping down here, the company further acknowledges that, except to the extent an issuance would exceed the beneficial ownership limitation obtained in the transaction documents, its obligation to issue the conversion shares upon conversion of the convertible notes and the warrant shares upon exercise of the warrants in accordance therewith and with this agreement in absolute unconditional, regardless of the dilutive effect that such issuance may have on the ownership interests of other shareholders of the company. So there you go. So regardless, these specific shareholders will be getting their full amount of value out of the stock. So if the stock price drops, they're just going to get more and more shares until they're able to meet that $6 million, actually $6.3 million. That's what Mullen's going to owe them. So you have to remember that, again, Mullen hasn't necessarily paid cash for any of these. And if they did, that cash probably got generated from another equity agreement, another SPA. There is some cash that's available if these specific lenders decide to exercise their warrants on a cash basis instead of cashless basis, but we'll talk about that when it comes up later on. All right, next up is this equity capitalization. So this goes into a little bit about the background of Mullen Automotive as a company. What's the maximum number of shares of common stock that they're allowed to issue? And remember, every time they do a reverse split, they're reducing that outstanding share count again, and they're able to keep just adding more shares and adding more shares. So as of the date hereof, the authorized capital stock of the company consists solely of 5 billion shares of common stock, of which 61,595,743 are issued and outstanding. So that is the current issue and outstanding. So if you remember, it said that the warrants could potentially be about 32 million. So basically half of the current share count in the form of warrants, if all those were to be issued. And again, the only way to be able to issue that much is if these lenders, these investment lenders, if they were to continue to rapidly sell their converted notes back into the market to be able to acquire those warrants and sell those warrants off, because they can only hold 9.9% of the company in essence at one single time. So again, We're talking about 50% of the overall outstanding shares. In order to actually get all those, they're going to have to dilute the company's outstanding share count significantly in order to tap into all of that. And we'll talk about just how many shares it could potentially take and why that S1 has such a large, alarming number of shares. So again, and 81,620,446 are reserved for issuance pursuant to convertible securities as defined below. So there's already a ton of shares that are reserved for other convertible note security purchase agreements mentioned, but let's jump down a little bit further in here and see about the rest of these specific ones. And or an approved share plan. No shares of common stock are held in treasury. All of such outstanding shares are duly authorized and have been, or upon issuance will be, validly issued, fully paid, and non-accessible, except as disclosed in the SEC documents. So to the company's knowledge, no person owns 10% or more of the company's issued and outstanding shares of common stock. Again, this is calculated on the assumption that all convertible securities, whether or not presently exercisable or convertible, have been fully exercised or converted. So this means that there's that shelf option to where they could potentially exercise more than 10%, but again, the company is saying that there's an assumption whether or not these presently exercisable or convertibles have been fully exercised or converted. So that may be taking account of any limitations on exercise or conversion contained therein without conceding that such identified person is a 10% shareholder or for purposes of federal security laws. I'm not going to read through all the rest of this. This is just really going into how they're covering their tracks. Some of this may be boilerplate in terms of how these individuals are able to do that. I'm going to jump down to section 4 down here. It says, except for the convertible note, there are no outstanding debt securities, convertible notes, credit agreements, credit facilities, or other agreements, documents, or instruments evidencing indebtedness of the company or any of its subsidiaries, or by which the company or any of the subsidiaries is or may become bound. So again, they're just talking a lot about some of the details behind the amount of shares and how they are reserved right now for this convertible security. So we're not going to go into any more details. We're going to jump down here a little bit further. We're going to look at manipulation of price. The company has not, and to the knowledge of the company, no person acting on its behalf has directly or indirectly taken any action designed to cause or to result in the stabilization or manipulation of the price of any security of the company to facilitate the sale or resale of any of the securities. I want to stop right there. I think that's a very interesting quote. If you think about it, they're saying that the company nor subsidiaries has, the company, and to the knowledge of the company, no person acting on its behalf has directly or indirectly taken action that would result in stabilization or manipulation of the price of the security. So when they put out the PRs, could that potentially be considered manipulation of pricing? I don't know for sure. I'm just asking the question. And then you have to think about the fact that we know that Volti PR that they put out was very misleading. It got quite a few people excited, potentially buying in with large amounts of their own personal money that they worked hard for. And my question would be, after knowing that it actually went to a small subsidiary, some kind of car leasing company that, to my knowledge, would not have the type of funds to purchase such a large order of vehicles. I wonder if that would be considered any type of manipulation. I'm asking the question. I'm not, accusing anyone or the company. But let's keep reading. The second part of this manipulation price: sold, bid for, purchased, or paid any compensation for soliciting purchases of any of the securities, paid or agreed to pay any person any compensation for soliciting another to purchase any other securities of the company. Reading over here, Jesse, did I buy Bitcoin mining stocks after the dip the other day? I've picked up some additional shares here or there, getting my dollar cost average down a bit. I do feel, based off of the Bitcoin pricing, that these specific stocks will be under some additional selling pressure potentially. So we'll have to see how the market reacts to that. Again, Bitcoin has been very volatile, jumping all over the place. So it'll be interesting to see where it goes in the days and weeks to come. I do know that President Trump has had some various discussions. He was talking about potentially eliminating federal income tax, as well as some capital gains on cryptocurrency. So in the event that capital gains on Bitcoin was to go away, I think that could make purchasing and selling Bitcoin even more lucrative for certain companies or individuals. So I'm going to be interested to see how some of this legislation may impact the price of Bitcoin, but that has yet to happen. So we'll have to find out. And then on the warrants, if they go to OTC, will the other companies own what's left? So no. So if they were to go to OTC, that ticker would change over. It would be if the company was to go into bankruptcy and had to liquidate their assets because of all of the current debt that they're in. That would be why. That would be when some of these other companies could potentially acquire some of their assets and properties. So let's jump down here. Good question, though. Let's jump down here, going to this next section. Again, we're only on page 18 out of 43, so that's why I kind of pre-scanned this a little bit and just put some check marks next to the sections I thought were worth kind of sharing. Here's an additional investment clause. So let's read through this section here. It says, beginning on the date hereof and ending on the on the 1 year anniversary from the latter of the date of registration statement covering all registrable securities is declared effective, or the date the company has obtained stockholder approval, each buyer shall have the right but not the obligation at any time from time to time in its sole and absolute discretion to purchase from the company additional convertible notes in the amount equal to such buyer's pro rata portion of up to an aggregate principal amount of $6,315,789. So what this is saying is that this specific secured note, which is about $6.3 million, these investors have the right to purchase another $6.3 million worth of shares from the company. And again, the company is only going to get $6 million for each of these tranches. But this is, again, additional shares that could be purchased. And if you understand the impact, the dilutive impact on these shares, it basically has the potential to be doubled. But again, we'll continue reading through this a little bit more. And again, it would make sense for them to want to purchase these additional shares if they've fully liquidated, or for the most part liquidated, their current positions, because again, they can't hold more than 9.9% at any one given time. So why would they loan the company that additional $6 million if they are not able to convert anything? Of course, they will get that 15% annual interest. And then in the event Mullen defaults on any of the different line items, it will jump up to 20%. So that would be the only reason in my mind that they would add another $6 million, is just to be able to get that extra 15 or 20% interest, annual interest. But jumping down here again, on the same terms and conditions as applicable to the purchase and sale of the convertible notes, each buyer may exercise such right by the delivery of written notice to the company, which notice shall include a statement that such buyer is exercising its right to cause the additional purchases. The principal amount of convertible notes to be purchased by such buyer and the date on which such purchase and sale shall occur, which additional purchase closing shall occur within one trading day following receipt of such notice by the company, or such other date mutually agreed upon by the buyer and the company. Terms and conditions of any additional purchase shall be identical to the terms and conditions set forth in this agreement. So you don't have to worry about reading another agreement. If they go for another tranche, they're going to follow by these same rules, which includes some of the floor pricing, that 8 cents per converted share and that 1 cent per converted warrant. Now, I do believe that if the shares go through reverse split, there is a Black-Scholes calculation. I do believe that there will be a different floor setup. But again, if I'm not correct and someone is watching this later, please drop a comment. Let me know your thoughts about how a reverse split impacts the floor price and the ceiling price of an SPA. All right, let's take a little bit of a gander down below here. Sorry, when I look up at the camera, I tend to lose my place a little bit, but let's talk about the trading day. Yep. Okay. The terms and conditions of any additional purchase shall be identical to the terms and conditions set forth in this agreement, applicable to the sale of the convertible notes, provided that the maturity date of the convertible notes shall be 4 months from the issuance date of such additional notes. So again, that is the maturity date. So if they were to purchase more notes 6 months from now, then 10 months from now would be when those newly purchased secured notes would mature. And when we talk about maturity, that's when the investor, the lender, has the option to exercise those shares right away. So a lot of times you'll see companies that are able to get 3-4 years of timeline for that secured convertible note. That means that they are not going to have to provide that full principal back to the investor until that specific maturity date. So I think it's interesting that the maturity date is so small on this loan. And we know based on Mullen's cash on hand, they, as far as I am aware, and again, we only have what they've shared in filings, I don't think they have much cash compared to their debt. So in 4 months from now, it's going to be very interesting to see when they put out some additional earnings reports, what kind of cash they have at that point in time, and will they be able to pay these secured notes back in cash, or are they going to have to do it in shares? Because again, Mullen does have the option, although they haven't done it ever to my knowledge, they do have the option to pay these notes back in cash instead of shares. But again, with no real forward guidance on deliveries or sales of vehicles, I find it difficult for them to muster up the cash. So I do feel, my personal opinion, that they will go for shares, which again will be dilutive, and it will, again, in my understanding, cause the share price to go down. If you think about it, just a great example of dilution. If you have a couple of 8 ounces of coffee, you dump another 8 ounces of pure water in there, that caffeine is going to be diluted for each sip of coffee. So it's the same thing when you look at the share count of a company. If the share count doubles, the value of that share is going to get cut in half. That's just simple math. All right, so jumping down here, we're going to take another look. Don't want to read through the rest. I will read through this last little section because it does have another dollar amount, has to do with some of the warrants. By all means, it's important to understand how these warrants are going to impact the share price as well. Further upon each additional purchase, each buyer shall receive his proportional amount of warrants identical to the terms and conditions set forth in this agreement. So again, 1 cent floor. Provided that the expiration date of the additional warrant shall be the 5th anniversary from the issuance date of such additional warrant. So again, just like the secured convertible notes have a 4-year maturity, these warrants have a 4-month maturity. These warrants have a 5-year maturity. Just me, what will the RS be? I mean, I feel that with the potential that the NASDAQ could reject another reverse split down the road for Mr. Mishry and Mullen Automotive, I do feel that they will try to go after that max amount, but we'll have to see. That's just my thought. There has been some additional rules put in place by the NASDAQ in terms of excessive reverse splits. So I do feel that if they're going to use it, they are going to use this one as high as possible. Again, they want to stay listed on the market as long as possible. It just makes it easier for investors to be able to purchase their shares. They have a lot more opportunities such as Robinhood and Fidelity or what other types of platforms that these investors are using. When you go over to OTC, it does limit the opportunity, and there's other limitations as well. But I do believe that these specific investors that have been with Mullen throughout this entire process and have reaped the benefits of these discounts and these warrants in terms of just wringing out that market cap and lining their pockets, they will follow Mullen, even if it is into the OTC, as long as they can do so legally. Again, most of what's happening, it's legal based on these filings. You just have to read through and just understand the severity of some of these SPAs and the impact of these warrants. So jumping back down here, if a buyer or buyers elect to execute additional purchases pursuant to Section 4K, the company agrees and covets that the restrictions applicable to additional rights registration statements provided in 4I and the additional issuance provided in 4J shall apply following the date on which additional notes and additional warrants are delivered, but only if the aggregate aggregate purchase price for such additional purchase is at least 1.5 million. So again, there are some specific restrictions in terms of what percent of the common stock or the outstanding shares can these lenders or these investors own. It's at that 9.9%. And basically there are different covenants and restrictions that they have to follow. But for some reason it says here that they would only do that if these investors purchase at least 1.5 million. All right, let's take another look down here. Nothing on this page I have checked. Stockholder approval, again, based off the fact that they have up to 5 billion shares outstanding. There's only a couple reasons why they would have to go after stockholder approval. So let's just take a quick look at this sentence. But I do believe, at least based off of previous filings, that I think Mullen's covered. They only need to do the vote in terms of the reverse split. I do believe that these shares are going to be available at their disposal as long as the NASDAQ approves, right? So the company shall take all action necessary in accordance with applicable law, its organizational documents, and the rules of the principal exchange to establish a record date for duly call, give notice of, convene, and hold a meeting of its stockholders as promptly as reasonably practicable for the purpose of obtaining the approval of its stockholders for the issuance of common stock pursuant to this agreement in excess of the exchange cap. So again, if they go past the 5 billion shares, and again, every time they do the reverse split, that outstanding share count goes down, that 5 billion amount doesn't change. So I don't think Mullen Automotive is going to be going for a shareholder vote anytime soon for 5 billion shares of the company stock, at least my opinion. All right, let's jump down to the next section here. Nothing at all on this page, just talking about their transfer agent. Down in here, conditions to the company's obligation to sell those shares. I'm not going to read through that section. Conditions to the buyer's obligation to purchase. I think I do have one of these checked later on. There's a clause about being able to terminate this specific SPA if certain criteria is not met. They go through some other definitions. And then there's the exchange cap. So I thought that was interesting. I thought it was 5 billion whenever I was first reading it through here. But the clause, I guess the stipulation is that they can't add more than 20%. They can't add 20% or more to the outstanding share count at any given time. So the exchange cap means 12,312,989 shares of common stock, which is the number of shares equal to 19.99% of the number of shares of common stock issued and outstanding immediately prior to the execution date. So basically that means that to start with, the maximum number of shares that they're going to be able to give these lenders is going to be this 12.3 million based off of the 20% ownership rules. However, as these notes are converted over into shares, dumped onto the market, the warrants, again, are converted over to shares and dumped onto the market, the outstanding share count is going to grow rapidly. And as long as the additional shares that they issue stay under 20% of whatever that outstanding share count is for that specific point in time, Mullen's going to be covered. And let's be honest, we've seen the share count triple, quadruple in a very short period of time. So at least currently, they're letting us know that on day one, they're only going to be able to give 12.3 million shares at one time, which is still a rather significant amount. Not quite, well, right there, 19.99% of that outstanding share count. So let's keep on. Through here, nothing here, nothing here. Nothing on this page. We're at page 33 of 43, so we are making our way, folks. This is just some of the information about the people who helped put some of this together and their different title agencies, I believe. Company, transfer agent, not title agency, transfer agency, yeah. Let me go through quickly, maybe at the end of this. Here you go. So in case you were wondering, through this entire SPA, they didn't really announce who these specific buyers were, but as you can see right here, there's some familiar names: Isusa, JADR Capital, and TD Capital. We're going to go into a little bit of the amount of each of the amount of shares, or the value of the shares that each of these companies are purchasing, in just a little bit. So starting with Isusa, and again, we're just going to go through these three, and then we're going to move on to the S1. So with that 5% discount, Isusa is going to get $3,157,894. That is going to be the amount that they're going to be owed at the end of this maturity time period. Again, they get the 5% discount, which means that Mullen is going to get $3 million from Isusa. And then they talk about the different stipulations. It's equal to 5% to the lower of that closing sale price of the common stock on trading day, immediately prior to the execution date. Closing sale price of the common stock on the date on which the initial registration statement, registering at least the number of shares of common stock equal to the initial required registration amount, is declared effective by the SEC. Or, and remember, we're talking about the lower of, so it could also be the lowest daily VWAP in the 5 trading days prior to such conversion date designated by the buyer, but in no event less than 8 cents. Here again, this is that floor price, not subject to adjustment. Not subject to adjustment. So that's an interesting clause. Again, I'm not sure how the reverse split impacts this floor price, but I guess we'll have to wait and see. The purchase price for such convertible notes is $3 million. So again, Isusa is going to pay Mullen Automotive $3 million, and in return, they're going to get $3.1 million plus the interest. All right. Moving into the warrants. For no additional consideration, 5-year warrants to acquire 2 shares of common stock. So for every one share that Isusa does receive from Mullen, they're going to be getting 2 warrants. So again, as I mentioned, with that maturity date, Mullen could pay cash, could pay this money back to Isusa in full, not have to deal with these warrants. However, we have yet to see that actually happen. As we are all very well aware, that's about 3 years worth of Mullen's revenue, and these this SPA has about a 4-month maturity date. So pretty sure this is all going to be in shares. So anyway, back to the warrants. 5-year warrants to acquire 2 shares of common stock for every conversion share issuable to the buyer under the terms of the conversion notes. Each purchase warrant shall have an exercise price equal to 105% of the closing sale price of the common stock on the trading day immediately prior to the execution date. So again, each time that they decide to exercise those warrants, they're going to basically get that 5% discount at every exercise. And remember, these warrants can continue to be exercised down to a single penny. All right, and there is a section here. It says the company shall have the option to require the buyer to exercise the warrants for cash if at any time each of the following conditions are met. So again, instead of the company can actually get some cash out of this specific deal if these conditions are met. The registration statement covering the registrable securities has been declared effective by the SEC according to the Securities Act. It is effective and available for the resale of registrable securities, and the company has not received any notice that the SEC has issued or intends to issue a stop order with respect to such registration statement, or that the SEC has otherwise suspended or withdrawn the effectiveness of such registration statement. It's very interesting. I don't know if that's boilerplate or not, but it seems pretty dramatic for that number one condition. Number two condition, the company is not in violation of any of the rules, regulations, or requirements of the principal market and has no knowledge of any facts or circumstances that could reasonably lead to suspension of the common stock by the principal market in the foreseeable future. Again, I have not seen their stock suspended to my knowledge. And the third condition, the VWAP, for the 10-day period immediately preceding the date on which the company elects to exercise this option, is 250% above the exercise price. So again, if Mullen wants Isusa to exercise the warrants for cash, meaning Mullen could pay them in cash, that third condition is interesting. So the company would be able to elect this option if the exercise price is 250% above the VWAP. Excuse me again. So again, that's very interesting. So if the stock price was to 2.5x, Mullen Automotive could require Isusa to exercise those warrants, and Mullen would then pay cash. So, interesting scenario. Let's move on to buyer number 2, JADR Capital. The only difference is going to be the purchase price. So, Isusa was purchasing or was paying Mullen $3 million and getting back 5% above the $3 million, where JADR is purchasing $1.5 million worth of notes, and they're getting $1.578 million back. And again, they can be convertible into common stock. Have the same floor at 8 cents. And then the warrants, they have the same exact criteria as well. In fact, if you just kind of bounce back and forth, the only thing changing between the schedules are the buyer's names, contact information, and the pricing. So we'll move on to buyer number 3, TD Capital. And again, same thing. It's the same exact stipulations and conditions. And again, TD Capital, number 1, Pty Limited, is going to be paying Mullen $1.5 million in order to have these convertible notes. All right, and I think that about does it. We're on page 43 of 43. We are about halfway done so far. Hopefully this hasn't been too dry. I know that going over these filings can be somewhat boring, but I'm hoping that a little bit of my comments and feedback is helping a little bit. So jumping down into the S1. This was just filed on January 29th. So this is that fresh, hot off the press document. Definitely want to go through that with you all. This is some share registration, again, for Mullen Automotive. So scrolling down a little bit before we jump down to the next page, did want to show a little bit about the share count. I think that's on page 2. But this just talks about the Mullen Automotive, about them being a small reporting company, non-accelerated filer. That's why they get such a long time to be able to put out those earnings reports as well. Going down to page number 2. Again, this red section, this is still a draft. So this S1 is not fully effective yet. There will be another finalized S1 that will get put out. This is just a preliminary prospectus, as it says right here. So again, in this prospectus, this S1 filing, it is for, they would like to register 50 million shares of common stock Let's read through this section a little bit. I have a couple of pieces here highlighted. So this prospectus of Mullen Automotive Inc. Relates solely to the resale by the investors listed in this section of this prospectus entitled Selling Stockholders of up to 50 million shares, in parentheses, offered shares of our common stock per value 0.001 per share, issuable upon conversion of convertible notes, the notes, and exercise of warrants to purchase shares of our common stock, the warrants. As of January 27th, 2025, there were outstanding approximately $14.3 million aggregate principal amount and accumulated interest of notes convertible into an aggregate of 19,913,254 shares of common stock. So that's what's still out there from old SPAs, from revisions to prospectus statements from Mullen Automotive, some of the dilution that has been occurring over time, all of that, the remaining amount that they still owe, that they have taken money from these investors, they still owe $14.3 million, and then they still have to make do with that $19.9 million of basically shares from those converted warrants. So that's a pretty big amount. It's pretty substantial, and that's why they're wanting to register 50 million shares. So again, let's continue reading through a little bit further. I'm sorry, the 19.9 million shares, that's the common stock. That's not the warrants. So that $14.3 million of notes would be converted as of this specific day of January 27th. It would be converted over to 19.9 million. The warrants, however, here it is, on a cash basis for an aggregate of 8.4 million, 8,405,988 shares of common stock, which were issued pursuant to the security purchase agreement dated May 14th of 2024, and which total amount represents 31.4% of beneficial ownership of shares of common stock. So again, that's interesting. These specific warrant holders can't currently exercise these warrants because that will put them over the top in terms of beneficial ownership. So again, the writing on the wall is there. Once these shares are registered, I do believe that a lot of these shares are going to get converted, or a lot of these notes are going to get converted, and then the warrants again will get exercised and converted as well. At least that's my thoughts. I do believe that they are just at a point where they ran out of shares. They ran out of share issuance, so they're putting out this prospectus to get another 50 million. And this 50 million is also going to help them for that latest SPA, that January SPA that we all found out about when reading the 10K. All right. Getting back in here, 31.4 beneficial ownership outstanding as of the date. For a description of the notes and warrants, including the conversion and exercise provisions, if you would like to read more about that, check out the private placement of notes and warrants. Each share of common stock offered under this prospectus has associated with it one right to purchase from us 1/10,000th of a share. So this has to do with that A1 junior preferred stock. So each of these offerings does allow these specific lenders to purchase some of this junior stock. I'm not going to read through all the A1 stuff tonight, but if you want to know more about that, you can definitely search the Edgar site for Mullen Automotive. Look up keyword, look up A1, or look up junior, and you'll be able to find more information in terms of the details behind that junior preferred stock. All right. Going down a little bit further, just wanted to point out that you can see at the bottom the date of this prospectus. It's showing blank because this is a draft prospectus. And then on January 28th, they did mention the sale price was at 29 cents, 0.292 cents per share. All right. Jumping down here a little bit. Cautionary regarding forward-looking statements. I'm not going to read through all the forward-looking statements. If you have watched that 10K earnings party video I put out, about a third of that video, over an hour of the video, was literally breaking down some of these forward-looking statements. That's just how much Mullen has to put in these filings to be able to cover the various activities that could occur. But let's jump into this prospectus summary. Talks a little bit about the company as a whole. I'm not going to read through that. If you're watching this video, you most certainly know what Mullen Automotive is all about. They have electric commercial vehicles that seem to be difficult to sell. They also sell a lot of shares. They talk a little bit about their activities with Bollinger. They talk about purchasing Elms. Talk about the class 1 through 6 market that they're in. They talk about their plant there in Tunica. They talk about the battery purchasing as well. They talk about putting their MULN 5 their MULN 5 consumer vehicle on suspension, or it's being paused so they can focus on commercial. So this RS is paused. The reverse split, the fifth reverse split, that 5RS, that is happening. That was already voted and approved. So at least there will be one MULN 5RS on the table for the company. All right, jumping down into private placement of warrants. Again, this goes through all of the open and outstanding warrants and notes that are going on. So each of those check marks is another batch of open notes and warrants for the company. And remember, all of those open notes and warrants are shares. So it's a lot of potential dilution. So let's start with this first check mark. And this has to do back with this May 14th. They talk about some of the details behind it, how much total principal amount was it, and then the different tranches that were put in place. But for this first tranche, let's read through here. Upon execution of the security purchase agreement, the investors purchase an initial aggregate principal amount of $13.2 million or $12.5 million, including that original discount. So again, Mullen's going to owe $13.2 million in shares or cash, and they received $12.5 million. However, there's still some open transactions here, including the 5% original discount of notes, and also receive warrants exercisable based on a cash exercise for an aggregate of, again, these are reverse split numbers. So if you were to convert this back at the time of this May 14th, there was a 1-for-100 reverse split that occurred. So this first batch was actually 47,934,000 shares. So just remember that when you're looking at some of these numbers, they may look small, but it's because the company's already done a 1-for-100 reverse split in less than a year ago. Here we are again, looking at a potential another one. Again, on July 9th, 2024, the investors purchased an additional aggregate amount of $10.5 million or $10 million, including that discount. So again, Mullen got $10 million. The specific buyer got $10.5 million worth of cash upon maturity date or shares. And again, there's interest that is being incurred for each of these. And they went through some of that interest on their 10K. And recall, if Mullen can't pay for that interest, it becomes a default. And I believe the company did have to go to court with Mullen in order to get additional shares available for them to be able to pay that interest debt in the form of shareholder equity, in the form of additional shares. Looking into this section here, again, this 10 million, they mentioned the total amount of shares for that 10 million came in. Again, I'm going to go ahead and use that reverse split number. So 383,473,000 shares. And on July 15th, 2024, the investors purchased an additional aggregate principal amount of 29 million or 27.5 million with that discount. They did get those warrants. And again, it's 105,455,000 shares of common stock. It's been reduced with that 1-for-100. All right, jumping down here on July 8th, 2024, as part of the original investment, right? One investor exchanged 76, this would have been million, we'll use this, 76,923 shares of Series E preferred stock for an initial aggregate principal amount of 3.2 million or 3 million with the discount. with notes and warrants in order to purchase another 115,042,000 shares, or shifted down with that reverse split number down to 115,042. On September 25th and 27th and October 2nd, 2024, pursuant to the original investment rights, investors purchased an additional aggregate principal amount of approximately 13.2. Mullen received 12.5 of notes and also received warrants exercisable on a cash basis, based on a cash exercise, for an aggregate of, again, reverse split numbers. It's 48,928, which at the time of the transaction was 48,928 shares. All right. Jumping down. Now we're into December of 24. As part of the original additional investment right, certain investors purchased an additional aggregate principal amount of 4.4 million, or 4.6 million, including the 5% original discount. So again, they paid Mullen 4.4, they got 4.6. Also received warrants exercisable on a cash basis for an aggregate of 16. This would have been 16 million. 60,862,000. Again, it's been adjusted for reverse splits down to just 16,862. In connection with the purchase of the additional notes and warrants, the company and exercising investors also entered into an additional investment rights agreement whereby for 1 year period ending on November 12th, 2025. So this is still going on. Those investors have the right, but not the obligation, to purchase from the company additional notes in an aggregate principal amount of approximately 4.6 million and related warrants on the same terms and conditions provided in the security purchase agreement. So again, the SPA that we just went over has nothing to do with these. It's a completely separate SPA, but it's interesting to see that they have an agreement with these investors for another 4.6 million. So if you think about it, with the amount of cash burn that Mullen has, they're going to have to continue drumming up more and more of these SPAs just to be able to pay the bills there. But here, let's read down here. On December 26th and December 30th of 2024, pursuant to the original additional investment right, so here you go, this investor has already decided to exercise. The company issued an additional aggregate principal amount of approximately 4.2 million, and they got $4 million from this investor. But the 4.2 is with that 5% discount of the secured notes. These are the December of 2024 notes. We're going to get into the January 2024 notes again. That's what that SPA was for. That are convertible into shares of common stock and a 5-year warrants exercisable on a cash basis. And this one's not split adjusted. 8,255,933 shares. So again, new SPA, more shares. There you have it. The December 2024 notes and December 2024 warrants have the same terms and conditions as the previously issued notes and warrants, except that the December 2024 notes may be converted into shares of common stock. They changed the floor pricing, it looks like, at the lower of $1.02, 95% of closing sale price of common stock as of the registration date, or 95% of the lowest daily volume weighted average price of the VWAP in the 5 trading days, and at which the conversion took place. So once they decided to convert those notes over, they're able to take advantage of the lower of all these prices. However, here's the floor for this specific SPA, provided that the conversion price will not be less than 21 cents per share. And then here's the warrants. The warrants have an exercise price at $1.12 per share and may be exercised via cashless exercise with a floor of $1. So there's your warrants, and there is your secured notes. It's interesting that the warrants have a floor of $1, which means that a lot of these investors are holding these warrants still. They can't exercise them because they have that floor of $1. But it does say it's subject to adjustment. So once this Black-Scholes calculation takes place and the reverse split ratio is all ironed out, I do think that this floor amount for these specific warrants is definitely going to change. All right, let's continue on. Here's December 31st, 2024. Pursuant to the original additional investment right, an investor purchased an additional aggregate principal amount of approximately 5.3 million or 5 million with that discount. So they gave Mullen 5 million. Mullen's going to owe them 5.3 million in cash or shares. Of the notes, it also received warrants exercisable on a cash basis for an aggregate of 19,171 shares. And again, this is not split adjusted. This is just the small amount of shares, which is interesting. That doesn't make much sense because we're talking December 31st, 2024. I think that this is a typo. Again, this is draft. Maybe Mullen can fix it. If anyone from Mullen's listening to this by any means, that should probably read 19,171,000 shares, considering we're talking about December 31st, and there hasn't been a reverse split from December 31st, 2024 to February 2nd. So you might want to get that adjusted because you could potentially have a dispute on your hands with these lenders if this is actually part of that contract. So anyway, in connection with the purchase of the additional notes and warrants, the company and the investor entered into an additional rights agreement, the December 31st additional investment right. Together with the original additional investment right, the new additional investment right, the additional investment rights were whereby for a 1-year period ending December 31st, 2025, the investor had the right but not obligation to purchase from the company an additional 5% original senior discount senior convertible notes in an aggregate principal amount of 5.3 million or 5.03 million as part of that discount. Related warrants, they're the same as the SPA except for some of these conversion prices equal to the 5% discount. And then they talk about the closing sale price of common stock. They talk about, or it's either on the trading day immediately prior to the date of issuance of the notes, or the lower if it happens to be the initial registration statement date. Once the SEC declares the actual effectivity, the lowest of the VWAP for 5 trading days. And then they talk a little bit about the contrary in the note, the conversion price should not be less than 20% discount of the price determined pursuant to prong, whatever prong is. And each warrant will have an exercise price equal to 105% of the closing sale price. So it's interesting. I don't see anywhere in this specific section where they talk about a floor. Besides that, it can't be less than 20% discount price. So we'll continue reading on. If someone knows a little bit about what a prong is, I could research it too, but we'll just keep reading through. As of January 27th, 2025, this is a repeat from earlier on, but let's just kind of refresh again. There were outstanding approximately 14.3 million aggregate principal amount and accumulated interest of notes, convertible into an aggregate of 19,913,254, and that's for the common stock. And then the warrants, they have that share count, again, if they're fully exercised, aggregate at 8,405,988. So again, that was earlier on. We went through all the SPAs that Mullen has, initiated from May all the way through December 31st, and to date, as of January 27th, there's still 14.3 million that Mullen is going to have to get converted or pay cash for. So again, not even including the new January SPA, there is 19.9 million shares yet to be converted and potentially dumped into the open market, with another 8.4 million in warrants. So again, that's a very hefty, very significant amount. And remember, these investors can't hold more than 9.9%. So that may be why there is still an excess amount of warrants open, or the fact that there's just no more shares available. And that's why they're registering this other 50 million shares. But again, let's continue reading through. I'm going to read through this section here. I thought it was kind of funny. They talk about the ceiling price of these, but we'll read this and then we'll get down to that 9.9% that we've been talking about. So the notes accrue interest at a rate of 15% per annum, so 15% annual rate. They have an original issue discount of 5%. they mature 4 months from the date of issuance. So the holders of these notes don't have to wait too long in order to be able to convert. As security for payment of the amounts due and payable under the notes, the company granted a continuing security interest in all its rights, title, and interest in its assets, whether owned, existing, acquired, or arising, and wherever located. Except as set forth above, the outstanding principal and accrued but unpaid interest on the notes may be converted by the holder into shares of common stock, as we've seen from time to time, at the lower of. So the max that they're going to convert each of these shares is $549. I don't see Mullen getting their share price anywhere near $549. So I think that's kind of funny that they put that price here. Not sure the expectation there, but it's kind of funny. All right, number two, and remember, this is the lower of. Lower of will be 95% of the closing sale price of the common stock on the date of this registration statement. The third lower of would be 95% of the lowest daily volume, so that VWAP for that 5 trading days prior to the conversion. Again, and here's your floor. The conversion price can't be less than $1.16 per share and not subject to adjustment. So again, we're sitting at 23 cents a share. Doesn't look like these will get converted anytime soon without that reverse split. And then, of course, all these numbers are going to have to get recalculated again using some of the Black-Scholes information and that other formula that we saw earlier on. Looking down in here, I'm not going to go over the warrant section. And as I mentioned, here's that predefined Black-Scholes value that I had mentioned earlier. But the notes and warrants are not convertible by a holder to the extent that the holder or any of its affiliates would beneficially own more than 9.9% of the common stock. So talking about all those open and outstanding convertible notes, that 14.3 million worth plus the warrants, these investors just can't actually exercise these notes yet because there may not be enough shares available. And that's actually what's caused Mullen some litigation in the past. There's been such a rapid decline in share price for Mullen, they've had to continue issuing more and more shares to these specific note holders and warrant holders to the point that they completely ran out of all the shares that they registered with the SEC and the NASDAQ. So again, that's part of this 50 million is to try to make whole on a good chunk of these shares. So you can imagine that if these shares are registered, there will be a significant amount of dilution back into the float or the common shares in terms of value per share. All right, and then they talk a little bit about the investment and the right. So the December 31st investment right are not convertible to the extent the aggregate number of shares of common stock in connection with such at any time exceeds 19.9% of the total common number of shares of common stock outstanding or the voting power of common stock outstanding as of the date of execution of such agreements. Unless the company obtains stockholder approval and compliance. So yeah, unless the stockholders agree to allow a single holder to own more than 19.9% of the shares of the company, then yeah, Mullen's got to stick to that rule. All right, let's jump down in here. We got to go a little bit faster. We're only on page 10 out of 50. But let's take a look here. So I have this section checked as well. I'm going to start right here. An initial registration statement registered for resale by the selling stockholder listed therein of up to 200,000 shares of common stock issuable upon exercise of notes and warrants declared effective May 29th, 2024. So this has to do with that registration rights agreement. Subsequently, the company filed additional registration statements that registered for resale by the selling stockholders listed therein up to 850,000 and 3.5 million shares of common stock issuable upon notes and warrants, which were declared effective August 2nd and September 13th. In the event that sales cannot be made pursuant to the registration statement or the prospectus contained therein is not properly available for any reason for more than 5 consecutive calendar days or more than an aggregate of 10 calendar days during a 12-month period. What does this section? I only wanted to talk about some of those additional shares, but I want to read through this last little bit. Company has agreed to make payments to each investor as liquidated damages in the amount of 1.5% of such investor's total committed purchase price for the registrable securities affected by such failure. So that's interesting. So again, if Mullen is not able to basically pay out in terms of cash or shares to these note holders, they're going to actually incur another 1.5% on every 30-day anniversary, the maximum of 12 payments. Such payments will bear interest rate of 10% per month until it's paid in full and may be paid in shares of common stock at the option of the company. So there you go. If in the event that they run out of shares, they would have to rapidly. This would cause some additional spiral dilutioning, if you want to call it that, with some of these other issues. This 1.5% and then another 10% per month, not per year. So very interesting. I'm not going to read through some of these sections here. Now, getting into the offering. Again, 50 million shares, common stock. This is for there, and this is actually, these 50 million shares are for all of the SPAs that are still outstanding in terms of notes and warrants that are still left over. So here is your new common stock amount. Again, this is as of January 27th. It's 61,777,360 shares. So there's your new share price. Typically, you'll see this on each prospectus, each draft or updated, amended prospectus. You'll get the share count. You'll get it also on some proxy statements. Yeah, Matt, it is still going, believe it or not. I don't know if you're talking about Mullen as a company listed on the NASDAQ or if you're talking about this live event, but we are still live, my friend. All right. I'm not going to go through these, the different the different series of common stocks. I'm not going to go over the ELOC too much. We did talk a little bit about the ELOC on that 10K party. And how a very, very small amount of the ELOC was actually used so far. And Mullen had to pay a substantial amount of money up front as good faith for the ELOC. So, again, just wanted to kind of point that out. They also talk a little about, this is another section here. So besides the amount of shares that need to be registered and available for those SPAs and the warrants, or I'm sorry, the notes and the warrants. Yes, the stream's still going. There's this additional amount of shares that they have to hold, and these are for that company's equity incentive plan. So out of the 50 million, again, they had out of the 50 million, they had the 19.9 million for the note conversion, and they had the 8.4 million for warrants. And on top of that, there's another 11.3 million of shares of common stock that they need to have for issuance of additional equity incentive plan. So you can quickly add it up. It's going to get close to almost 40 million so far of shares out of the 50. So let's continue on. I'll go through just a couple of risks. I don't want to go through all of them, but I think it's important to highlight the dilution impact. Our outstanding shares of convertible preferred stock contain anti-dilution protection, which may cause significant dilution to our stockholders. So if you remember, Mullen did hire an attorney that was supposed to help get better deals, some to protect against these types of dilution SPAs. However, it looks like they're still rocking the same old type of anti-dilution protection, which means that these investors, these large secured note holders, are going to be protected from the dilution, which means they're going to get more shares issued in order to make sure they're getting that same dollar amount from that initial transaction. So as of January 27th, 2025, they had the outstanding share count at 61.7 million shares. As of that same date, they had outstanding shares. They talk about preferred stock A's, B's, C's, D's. I go through all of that. But at the very end, it does say that the issuance of shares of common stock upon the conversion of such shares of preferred stock would dilute the percentage of ownership interest of the holders of our common stock, dilute the book value per share of our common stock, and increase the number of our publicly traded shares, which could depress the market price of our common stock. So again, we talked about it earlier on in the stream, but that is exactly what dilution does. If something's worth $10 and you now, in the event of double that item, there's a supply and demand. There's a certain type of impact where the value of that is not going to be worth as much. So, if you're whether you're collecting coins or trading cards or whatever, the less there are of a specific item, the more value that item tends to be. So just like when the government prints money, that in itself is a rather large dilutive impact to the value of the dollar. So this is the same way in terms of the share price when you look at the number of common stocks. All right. The second caution: our commitments to issue shares of common stock or securities that are convertible into shares of common stock may cause significant dilution to our stockholders. Anyone who's ever held Mullen the past couple of years, they do understand that, and that is definitely something that happens. We're not going to read through all this because we just read through quite a bit of it. This again goes over all of the SPAs that Mullen has went through. So just again, giving another word of caution to anyone. Through here, another check mark here. While here's one section. This was actually brought up. I was on a X space, and someone said, "Hey, don't forget to bring up this point." And it's a very important, very valid point. So, while NASDAQ rules do not impose a specific limit on the number of times a listed company may effect a reverse stock split to maintain or regain compliance with the bid price rule, NASDAQ has stated that a series of reverse stock splits may undermine investor confidence in securities listed on NASDAQ. Accordingly, if in the future the company is not in compliance with the bid price rule and effectuates another reverse stock split, NASDAQ may determine that it is not in the public interest to maintain our listing, even if we regain compliance with the bid price rule. In addition to the September 24 reverse stock split, the company previously effected a 1-for-25 split on May 4th of 23, a 1-for-9 reverse split on August 11th, 23, and a 1-for-100 reverse split on December 21st of 23. Plus, if needed, the company may effectuate another reverse stock split. And as we saw, the shareholder vote did occur this past week, and the vote was yes. The reverse split has been approved. So it's just a matter of what ratio will the company announce and when will it be effective. But again, is there potential that if Mullen does put out a rather large ratio, that the NASDAQ may decide to delist them because of that? I don't know. I will be very interested. I wonder if Mullen will have to propose the ratio to the NASDAQ to get approval before putting it out there, or risk delisting. Not quite sure. I think that would be the only reason why Mullen would not go for the largest potential reverse split, is to avoid being delisted immediately by the NASDAQ, because they have been an excessive reverse stock split company. They talk a little bit about the OTC. I'm not going to go through that. Let's jump down here. So use of proceeds. We will receive no proceeds from the sales of the common stock by selling stockholders. So when they make due of those secured convertible notes, they're not going to get any more cash. Remember, these investors already paid them cash for the notes. However, we may receive proceeds from the exercise of warrants and issuance of shares of our common stock, issuable upon exercise of warrants. If all the warrants mentioned above were exercised for cash in full, and again, these investors can decide to issue or can exercise a cashless basis, which would be more shares. The proceeds would be approximately $247.6 million. So if these investors decide that they want to pay Mullen for these warrants, Mullen could receive up to $247 million, which would be a nice chunk of money that they could use for their operations for the next few months. But again, it doesn't have to be that way. The investors could decide that they would rather exercise them in a cashless basis. We intend to use the net proceeds of such warrant exercise, if any, and remember, it could be nothing, for general working capital. We can make no assurances that any of the warrants will be exercised, or if exercised, they will be exercised for cash, the quantity which will be exercised, or in the period in which they will be exercised. So again, just a note there, I wouldn't get too excited if someone is reading page 10 of this S1 and they're thinking, oh man, Mullen's going to get another $247 million from these investors when they exercise their warrants. It's up to the investors. The investors could say, I'd rather have your shares and rather just continue diluting your common share count versus cash. I mean, why would they want to pay Mullen all that cash? So anyway, it's interesting, to say the least. So let's continue reading on. And if I butchered the warrant exercise and I have it kind of reversed a little bit, let me know in the comments. I don't mind a little bit of critique. Placement of notes and warrants. We're not going to go through all of these. I realized as I was prepping this that quite a bit of this was duplicated information. We already talked all about these specific shares and warrants. So let's kind of scroll through all of this section here. They talked about all of that. They talked about the interest rate. So yeah, a lot of this has been doubled up within this S1 filing. Here's a section we'll talk a little bit about here. So again, we're talking about default. So besides the description notes, in the event that the company cannot either pay these investors on the maturity date with additional shares or with cash, they could become in default, and that also has to do with the annual interest rate for these specific secured notes. Upon any event of default, the interest rate automatically increases to 20% per annum per year. An event of default includes the following. So any of these could potentially cause Mullen to default on this SPA. I don't want to read through all these, but if you would like to, by all means, take a look at it. Like I said, I'll put the link in the description, but let's take a look at the ones I checked. So failure to pay to the holder any amount due under the note or any other related transaction document. So that's a pretty easy one to understand. If they can't pay them cash or can't pay them in shares, then they're going to be in default. The next one I checked was the occurrence of any default under or acceleration prior to maturity of any indebtedness, in an aggregate amount in excess of $300,000, subject to any cure or grace period provided or payment default under such indebtedness. If such default remains uncured for 10 trading period days, then they would, in event, be in default, and that amount of interest would jump up to 20%. The third way that the interest rate could jump up to 20%, at least the third way that I'm going to talk about, is going to be bankruptcy, insolvency, reorganization, or liquidation proceedings, or other proceedings instituted by or against the company, which have not been dismissed within 30 days. So if they decide that they're going to go through bankruptcy court, because this is by or against the company. So if the company decides we're going to go to bankruptcy court and it's going on for at least 30 days, then this interest rate, this specific SPA will be under default, and the interest rate will jump up to 20%. And don't worry, as you read in the January SPA, these specific note holders actually own the right to Mullen's assets and properties if Mullen cannot pay for these specific stocks, these specific notes, I should say, as well as some of the warrants. So looking down a little bit further, I have two more things checked off. These are additional default opportunities for Mullen. A final judgments, any arbitration or mediation award, or any settlement of any litigation, or any other satisfaction of any claim made by any person pursuant to any litigation with respect to the payment of cash, securities and or assets with the aggregate fair value in excess of 300,000. So if you remember, if you read Mullen's 10K, they already said that there's a probable amount of $30 million for that GEM lawsuit, and there's another $5 million in class action lawsuit, if I'm not mistaken. So not sure if they're going to be able to wheel and deal and settle less than 300,000, but it does seem that this could potentially cause this new SPA to go straight into default, and that interest would jump up to 20. But let's read the rest of this specific section here. An aggregate fair value in excess of 300,000 are rendered against, agreed to, or otherwise accepted by the company, in which judgments are not, within 30 days after the entry thereof, bonded, discharged, or stayed pending appeal, or are not discharged within 30 days after expiration of such stay, provided that any judgment which is covered by issuance or an indemnity from a creditworthy party will not be included in calculating the 300,000 amount. HUD Razor, thanks for joining for a little bit. This could be my last Mullen party, if you will, live stream. But I did want to go ahead and give these shareholders a little bit more about these additional filings, as they do have to do with a significant amount of dilution. So again, thanks for joining. All right, on the last item that could potentially cause default, it's going to be the failure to file annual or quarterly reports within the required periods. I highlighted that because it's a common occurrence for Mullen to not file on time. So again, those are all the different items that could potentially cause the company to go into default and that interest rate to jump up to 20%. All right, converting of the notes and warrants. Again, I just highlighted the EP1 section here. So if you read this equation here, the EP1 conversion price or exercise price as applicable in effect immediately prior to a dilutive issuance. So again, what these shares are worth right before a dilutive issuance. So when it comes to calculating the notes, they're not going to lose value. It's anti-dilution. They're not going to lose value if there's some significant dilution going on. I just wanted to kind of point that out. All right. Selling stockholders. Again, we talked a little bit about them in the SPA, but the S1 this is for those 50 million shares. So it's going to include all the previous it's going to include all the previous SPAs as well. So here's the full list. That's part of this S1 filing. Isusa Holdings, JADR. Jim Fallon, still in the house, still a note holder of Mullen. Jess Mogul, Michael Friedlander, Philip Bannister, Matthew Kreger, and Mario Silva. So if you notice, 2 out of the 3 parties for the new SPA are listed on this S1. So this S1 doesn't even include that latest January SPA, to my understanding. So that's interesting. Wondering if there'll be another S1 or an amended S1 of this to add that other SPA in. We'll have to see. I'm not going to read through all this, but if you want to see the multiplier of how many additional shares after this offering is put out, you can definitely take a look at that. These are the additional shares that are to be offered. So this is that 50 million shares worth. This is all the parties that will be receiving the 50 million. So again, there's even after this 50 million S1, there's still going to be some additional shares owed by Mullen to Isusa and JADR, and these I believe have to do with that other SPA. But anyway, we'll talk about that at another time potentially. All right, transactions. They talk about the ELOC a little bit. We did mention this. There was $150 million worth of an equity line of credit, but it just talks about a couple of times that it was used. So October 23, company issued 502,000 shares of common stock. I'm sorry, let's read it here. Pursuant to the ELOC purchase agreement, the company issued to Isusa an aggregate of, and again, these are reverse split in shares. Don't forget that. 247, it should have been 247,935,000 shares, but reverse adjusted down to 247,000 as a commitment. So not even part of the ELOC in terms of them getting any money back, but they just gave Isusa that amount of shares just as a commitment to say thank you for providing us this ELOC. And then from an ELOC standpoint, the company issued that 502 million, if you will, shares of common stock. Again, that's pre-split adjusted. Post-split adjusted is 502,000. In connection with the ELOC purchase agreement, the company also entered into a registration rights agreement with Isusa, pursuant to which the company agreed to file this registration statement. We know a little bit about that rights agreement that would allow them to hold up to 19.99%. January 23, 2025, company entered into a securities agreement with Isusa and JADR. This is the one that we're talking about. This is that January SPA. It wasn't involved in the history behind the S1, but you can see the section down here, whereby the investors purchase an aggregate principal amount of approximately 6.3 million. And it's interesting. Let me talk about two of the three names. We saw in the SPA that there was a third name. Jumping back over really quick, TD Capital, number one, PTY Limited, not listed, not talked about here. Is interesting. So anyways, I digress. Whereby investors purchased an aggregate principal amount of approximately 6.3 million. They got the 5% discount convertible to shares and 5-year warrants. They have the shares listed there, the 32.3 million of common stock. Terms and conditions of the notice of warrants are described in the company's report on the 8K filed on the 27th, and that's what we originally reviewed at the beginning of this stream, was that 8K. So again, these are extra shares outside of this S1 agreement, as we know that this S1 included these specific companies only, and you can see the extra shares right here. This 24 million and 12 million. This comes out to the 36.7, which is pretty close to this number here. So not sure exactly if they're going to be doing another S1 or if they're going to amend this S1 to include that new SPA. Don't need to read through this. Talks again about total number of shares that they are allowed, they're authorized to issue up to 5 billion. Just because they're authorized to issue, it doesn't mean they don't have to register them. That's why the company is going through and doing this S1 filing. They have to register all their shares each time, and they have to justify why they need those shares. And that's the whole point of this S1. All right, looking through here, looking for any more check marks, any more key highlights. A little over halfway done on this S1. I think I did kind of go through a little bit quicker on this second half, as there was quite a bit of redundancy in the way that this thing's filed, as well as just information that I didn't think was necessarily worth kind of repeating or going over. This is that rights agreement. We were all excited when we first heard about this as investors. We thought maybe there's opportunity for dividends. Haven't really seen too much about these triggering events yet. So we'll continue looking. I feel that if there was going to be a triggering event, I feel like it would have already happened. If you look at the number of secured notes, the value of the secured notes that are still available, the only thing that would have stopped the triggering event, I guess, would have been the fact that they didn't have enough shares registered. But if you look at that S1, if you look at that table, it looks like the company had the investors, Isusa and JRDR, they had a significant amount of shares and warrants that they can convert to shares. So I'm assuming that the triggering event won't happen. But again, it's my assumption. All right, we are getting close. Plan of distribution. So couple ways that these shares could get introduced into the market and different types of transactions. So one thing I want to point out was short sales. So again, these registered shares is 50 million shares. Part of the transaction is going to involve some short sales. So the companies that are part of the selling stockholders may sell all or a portion of their shares of common stock beneficially owned by them and offered hereby from time to time directly or through one or more underwriters, broker-dealer agents, If they're sold through underwriters or broker dealers, selling stockholders are responsible for underwriting discounts or commissions, agent's commissions. So yeah, if they want to use a third party, they've got to pay whatever those commission fees are going to be. Common stock may be sold in one or more transactions at fixed prices, and prevailing market prices at the time of the sale at varying prices determined at the time of sale or negotiated by prices. So again, they could basically sell a block, and then it's up to the market makers and whoever else is listed to these selling agents, whoever is responsible for getting these shares out into the market, right? So that's interesting. Just want to point out, again, short sales, they're on the table for this specific S1 filing. Talk about the legal experts and matters. I don't recall if there's anything else. Let's just quickly look through the fees for actually filing this thing. Talked a little bit about all of the sales of unregistered securities by Mullen. It's a pretty long list. Did talk a little bit about the same ones that we mentioned. Certain shares are committed for this ELOC. And out of all the ELOCs so far, they've only issued the 502,066 shares, so, which I think could be 502 million. I have to look back again. Oh no, I'm sorry. This is why I checked it. I'm sorry, folks. I checked it because look, it says here September 12th, 2024, company issued these additional shares of common stock to Isusa as part of the ELOC. Okay, and here May 21st, 2024 is when the company entered into the ELOC. So again, if that's the case, this is a typo again. On October 23rd of 23, this should read 24. The company issued 502,066 shares. So again, another typo by the company. Good thing this is draft. I'm sure they get an opportunity to get it corrected, but if it does become a final one, it'll be comical. It's going to be an error. All right. Reading through some more of this. Again, we're going to skip a lot of these transactions. Going down to the January 23rd, they talk about the aggregate amount of the common shares and 5-year warrants. The aggregate, so the combination is 32,388,664 shares. And the right to purchase another batch of 6.3 million worth. All right, I think that about wraps it up. I'm on page 46 of 50 according to my PDF. So undertakings, guys, that's almost everything. The last little bit we're going to quickly go over, and I say quickly but because there's only 22 pages, is going to be the registration rights agreement. So when these different filings are put into place, these SPAs, one of the other filings you have to put in is a registration rights agreement. You have to register for these specific shares, right? So let's read through that. And they have like an effectiveness of the registration. Initial registration amount, 20 million shares of common stock. So that SPA that we read about, the January SPA, they would like to register another 20 million. And again, there's a filing deadline. After the registration statement is approved, they've got to have out the S1 filing, and it's got to be declared effective by the SEC. So again, when we see that effectivity filing coming in from the SEC, that's when you know that they have the green light to start issuing more shares. So again, pay attention to the share price once that effectivity date occurs. Is it going to go down or up? Is dilution going to cause the price to go up, or is it going to cause it to go down? There could be a potential pop originally in the price, and that has to do with converting the secured note over. I do believe that does look as if there's buying volume, but we all know that after those notes are converted to shares, those companies receive double warrants for every share, And then they're able to sell those warrants back into the market. And that typically brings the price crashing down much lower than when it was originally, when those notes were originally converted. All right. We are not going to read through this entire paragraph, but just wanted to mention that there is a very large word of caution if the company fails to obtain the effectiveness registration statement from the SEC. They talk a lot about the different repercussions, any type of fines, any other types of payments that the company would have to transact in order to make this whole, make it right. All right. Talk about the offering, piggyback registrations. Not going to go through all that stuff. I did have just a couple checks. We are, like I mentioned, this is going to be quick. We're going to churn through this thing. I believe we'll be done by midnight. I'll take a look. If you guys have any other comments in the chat, we'll chit chat a little bit before we close this thing down. Appreciate you guys for joining me live on this. All right. This is close to the end, 15 out of 22. So there's not much to it. Just wanted to point out, again, we're dealing with these same three people because this is for the SPA that was mentioned. And then the notice, this is what the form for the notice of effectiveness looks like. They don't have the exact date yet. This is just an exhibit to kind of show you what will be coming out at some point in the near future. And again, when this thing comes out, expect the share price to start to change. And they don't even, they leave this section blank as well because, again, it's going to change once this thing is registered and effective. Once all these blanks are filled in, this is just the form. We're going to get some more information about the selling stockholders. Should be in some form of an exhibit. And plan of distribution. This is the same SPA. This is registration rights agreement. So the S1 had a little bit about short selling. The SPA as well. It also mentions that. So these are the different methods that these registered shares could be transacted back into the market. And it says short sales made after the date the registration statement is declared effective by the SEC. So again, once this new batch of shares are registered, there may be a significant amount of short selling going on for Mullen Automotive stock. And why would they short sell? Because they're reading these filings, they're understanding that there is a significant dilutive impact on the share price. And again, they are taking that risk, not financial advice right now to short the stock, but that is some of the logic that the short sellers do take into account. And that, my friends, is the end of this 8K SPA S1 registration rights agreement. Appreciate you guys sticking around. I don't see anything new in the chat. So let's just switch back over to closing comments. So again, just want to kind of go through Mullen Automotive. As you can see, even prior to the new SPA, there was still a significant amount of money needed in order to be able to make whole the older secured notes, right? So, and then there's a lot of options for these same investors to purchase more notes to be able to give Mullen more money. But recall that the majority of the transactions, when Mullen owes these investors these secured note amounts, it's typically transacted in the amount of equity, shareholder equity. So again, it does look like there's a significant amount of shareholder equity that will be getting taken out of the market cap and given back to this investor. And when I say taken out, I just mean the value of each share. I shouldn't say it's taken out. They're just gonna, each shareholder's stock is going to be worth a significantly amount less if you do agree with the dilution impact here. So again, it's really all about that market cap. What is the company getting what are these investors getting in terms of what is the remaining market cap? And then recall with this upcoming reverse split, we're going to see a significant jump in share price, but we're going to see reduction in common share count. I will be interested to see what the share count comes out as once this split occurs, and then how quickly will these shares that are being newly registered on this S1, how quickly will they get dumped back onto the market? So as I always say in my videos, if you did like this video, please consider giving this live stream a like. Subscribe to this if you haven't already, and make sure you have notifications turned on. I don't always cover Mullen Automotive. In fact, I love covering some of these other companies that happen to be profitable. They have a product or a service that they're able to sell and generate revenue for. And revenue is a good thing. It is one of the main reasons as an investor that people invest in stock is because, or invest in companies. They do believe that these other companies are bringing value to the world, to the market, and that they're going to be able to generate profit over time. As a shareholder in Mullen Automotive, I had a significant amount. I'm down to just one share in two of my portfolios, so I can still consider myself a shareholder. I have yet to see any type of value coming back to me. That EPS just keeps getting more and more negative, in my opinion. But a lot of these other companies, you do have the opportunity to make money in this market. You just have to find companies that have a very low debt to equity ratio, hopefully less than 1. And then also you want to find ones that do have nice profit margins, good amount of cash on hand, companies that can support themselves, where your money is going to go into an investment that's going to have a return on investment, to where that share price will go up as that company's equity, their company's value continues to rise. So again, just some of my closing thoughts. If you're considering purchasing any Mullen Automotive stock, make sure you're reading these filings. Make sure you understand that your stake in the company is being severely diminished by these filings. So all that said, I hope you all have a great rest of your nights and your day, and I'll see you on the next one.